Hello financial fans, all is well here. My portfolio did not change any during the past week. I have not bought or sold any new stocks or old stocks, whatever. And the things I think will be affecting the market this coming week is the shakeout, whatever happens with the ransomware demands for the oil pipeline use and so on. It seems odd that such a thing could happen, but it does happen in today's world, and things don't always go according to plan. And there's a saying on Wall Street that Wall Street stocks climb a wall of worry. It means more you wonder about what's going to happen in the future, things go up. So maybe that'll be true this time, maybe not, but we shall see. But one of the things is fact is that commodities, things that are real things you can hold in your hands, things like oil, you can get that on your hands, and iron and other metals, things that are the beginning of the product that is being made before it becomes the product. It is something from nature, which is either mined or drilled for, whatever. Those commodities seem to be going up in value, and I'm going to recommend 4 stocks to be added to anyone's portfolio. These may or may not be the kinds of things that will be going up, but I think they will, and they have had some nice dividends here in these stocks. We'll begin with Phillips 66. Phillips 66, the symbol PSX, and the first column on the left, 2/3 of the way down, 52-week range. $43.27 was the low, $90.59 was the high, so it did double at some point during the past 52 weeks. And currently it's at $86.04 per share, which means it's very close to the top. And that means Phillips 66 has been going up as other oil stocks have been doing, and in the meantime they're paying a good dividend. If we look 2/3 of the way down the middle column, we'll see that the forward dividend and yield for Phillips 66, 4.21%. That's a nice yield. And look up a little bit higher there and you'll see EPS, earnings per share. They lost money. There's a minus sign. $4.88 per share is what they lost, but they're paying a nice dividend. And that seems to be what the oil companies have been doing. I've held on to BP stock and XOM stock for several years, and even though they have not been making money in the near past, they've been paying out their dividend, and that dividend is very welcome. And if you're a person who buys and holds and sells when it goes up, the temporary dip in the price per share has zero effect. If you're not selling the stock and you're just hanging on to it and getting a very nice dividend, then it does not affect you. The next stock we'll look at, RIO, is the symbol, Rio Tinto Group. This is a mining stock, and again, things that are mined or drilled seem to be going up in value, so why not move in and in the meantime get a nice dividend. Rio Tinto, the price per share $93.17. We look down the first column on the left, 2/3 of the way down, 52-week range, $44.57 to $93.35. Here's another stock that doubled sometime during the past 52 weeks, and it's now right up there, almost the same as its 52-week high. After hours, it's trading at $93.30 per share. And the volume 2.5 million shares trade every day. That's down at the bottom of the first column, and also at the bottom of the first column on the left says overvalued. The experts think at the time they were giving a judgment on this that it was overvalued. The beta of the stock, 0.55, means it moves only about half as much as the stock market in general, and moves in the same general direction as the market. So if you think the market's going to be going up in the next few months, you're not going to be getting as much from this stock as you would from some other stock that had a wild beta of 1.55. For example, the PE ratio 15.53, that's in the middle of the middle column. And the earnings per share, $6. They got earnings. And the forward dividend and yield, 5%. A little over 5% is the current yield on the $4.64 for the $93.17 stock. And the 1-year target, down at the bottom of the middle column, $100. So that would be a nice move upward, and if you're a buy and hold person, something like this would be very good because you're getting that 5% dividend while you're holding on, and if it's moving up as much as they think, you're going to be in a good position when you get ready to sell it. Next stock, VALE, and the symbol VALE, and we look down 52-week range, $7.86 to $22.19. It also doubled during the past 52 weeks. The average volume, 28 million shares trade every day at that $22 price. And the PE ratio, third item down the middle column, 10.78 is the PE ratio. Earnings per share, $2 and a nickel. Forward dividend, 5.72, and that dividend is certainly well covered by the earnings, no problem there. That should last for as long as you want to hold on to the stock, unless the entire market or world opinion of the value of raw materials changes. The 1-year target, $23.24, a tiny increase in value, but still you're getting a nice dividend to hang on to. These are buy and hold type stocks. The next stock that we'll look at, ExxonMobil Corporation, and the symbol is XOM, and I do own this stock. And I've had it for years, and they pay the dividend just like it was still at the same value that it had when I first bought it. $62.43 per share, the current price for ExxonMobil XOM. And the first column, 2/3 of the way down, 52-week range, $31.11 to $62.55. Another stock that has doubled during the past 52 weeks. Average volume, 28 million shares trade every day. And the beta of this one is different. This one has a high beta, the beta 1.41, so it moves around more than the market as a whole, and moves in the same direction. And I have been holding on to it while it's been going up in value. And it could have some good times ahead if the price of oil keeps going up and price of raw materials keeps going up. Forward dividend and yield, 5.71%, which is plenty high for a buy and hold type stock, and this one is moving up. I know since it's in my portfolio, the price keeps increasing, and if you just hold on to it until you get ready to sell it, you're getting a nice dividend. The 1-year target estimate, they say $63.28, which would not be much of a move. I personally think it's headed much higher than that, but we shall see. And I thank you for watching.